Now we decided that is the I'm on the right side. I thought you were in the middle. No, you cannot be in the middle.
Piacere. Ma non prego.
Circolare hanno fatto a finestra di tenerla chiusa.
Hello, Tony. How you doing? So we start from your presentation. The idea was that stable coins is right. The dollar we're looking the whole dollar system in hyperinflation. It doesn't agree. It's not.
First thing we're going to say today is that we're planning for this weekend. So get ready for a spicy production.
First rule of fight work.
Also,
Potresti prestarmi il cartello. Guarda che c'è. Nobody has to fight. They're showing the when they have the option. This one, and by people buys dollar, and the worst is because of like they buy the coins, they give a high yield, but they buy. They don't know what they're making. Interest about the debt for me. Everybody owns because of the yield. They don't even know that this is actually in the background, the company set up, for example, 20% of the value of the stable coins, they're buying debt, they're buying short-term bonds. And in this case, actually, part of this debt, for you to be incentivized to buy more and more. And that way, what you do, if they're looking the debt on a global scale, most of the buyers don't want Asian companies, obviously, and inside the institutional bank.
B for the nuclear, what's the P for atom bomb?
More money, yes, $1, but in this case, this will encourage people to buy more debt from certain more debt. The debt grows on a global level and they're looking through the whole world because everybody knows that.
We have another one because people go there to smoke on the old space.
Another one. This is the question I'm answering at the basic level. That's how much they're collecting from all the
This is it. We are getting started now, so try to find a seat. This also goes for the people on the panel. Try to find a seat. One of the stools here on the stage. Everyone, if you cannot find a comfortable seat in the back, go take some chairs from the outside and sit outside, because there is still some space left there. Everyone, welcome to Crypto Hub Malta! And welcome to World War III. Oh, did I really just say that? I hope it's not World War III, but tonight we are going to talk about the economics of World War III. It's a bit of a spicy topic, I realize that, but before we start, I want to assure you one thing. The topic of tonight was decided before Israel attacked Iran. So we did this more than 2 weeks ago, and what do you know? All of a sudden, we are right in the center of attention. So this is why I just want to say we are not going to talk fundamentally about the situation. This was not anticipated. If there are some questions, sure, keep in. Let's see where the conversation goes. For you of you who are new here, who is here for the first time? Up with the hands. Welcome to you, welcome, welcome. My name is Ferris. We are at Crypto Hub Malta, the blockchain community in Malta. Physically, we are at Soho office. It's a co-working space here in Malta. They have 3 locations. At this particular location, there is a gym and a spa at the first floor. Second and third floor is full of shared offices. And here at the 4th floor, we have the event location. I'm just playing around a little tiny bit with my notes, because there is something that I wanted to show you before we get started. And this is my own diligent research that I did. I would wish to have this up in the back of the conversation, if I can manage so. Maybe my computer will not allow it. Okay. This is the debt clock of the United States. You might have seen it before during the time of the DOGE department, the Department of Efficiency, but this is the clock that I really want to show. These are the numbers from the Department of War, formerly the Department of Defense. They changed that, and this is something that we knew when we were planning this. And these are the expenses just for the attack on Iran. You can see this clock has been ticking for 11 days, and we are up $11 billion. This is what has been spent in the war for 11 days until now. And just to compare this to some numbers that make sense, Malta has approximately a GDP of $20 billion. To eradicate homelessness in all of the United States, and there is many homeless people in the United States, it would cost $20 billion per year. So if this keeps going for 9 more days, it would be equivalent of taking off all the homeless people from the streets in all of the United States. It's a big country, and give them a roof and a full belly. But that didn't happen, because today we are going to talk about the economics of World War III. Okay, the speakers today, you might know them. Luckily, they are a little bit better versed in economics than me. Francesco Carbone, Sam, and Antonio. You remember Antonio because he was here 2 weeks ago and spoke about stablecoins. Very popular, very popular. Stablecoins is also something that they are going to talk about tonight. I will just check my notes to see if there are some important announcement that I forgot to make, because today there is one very important announcement. Now, you know the Bit Research, they are a non-proprietary trading firm based here in Malta, and if you want to dig into any of the topics that we usually talk about here, go and talk to the Bit Research. I don't know if they're here today, but if you're interested in trading and you want to step up your game, maybe in collaboration with them, go reach out to them. Now, the big announcement that I have for today is something else. And that is that this year in May, there will be a blockchain native Web3 conference here in Malta. Chain of blocks. It's going to be an independent conference. Crypto Hub locally has been collaborating with them. So if you are interested in getting to know some industry expert that also travel internationally to Malta, this is where you can meet them and get involved. If you want to have some exposure, come talk to me or talk to someone from Chain of Blocks, to Valerio and George. They're sitting outside at this table. It's going to happen in the end of May, and the further we get, Valerio promised, the more details will be announced. So it's going to happen very soon, this year, Blockchain Native Conference in Malta. Having said that, I am going to pass on the 2 microphones we have here. One, of course, goes to Francesco. He is going to be the moderator of today.
Yeah,
Does it work?
I don't know.
I don't think so.
I don't think so.
I'm going to turn it on in a second. But before Francesco starts, there's one thing I want to point out. Few people know this, but Francesco is actually kind of a famous person in Italy.
Not true.
He has been translated, yes, for the libertarian circles and for the Bitcoiners, and also some Austrian economics in Italy. So Francesco, apart from his work, and like if you read the description, you know, he has been translating the Bitcoin Standard and the Fiat Standard and some other important books from English to Italian. They are here out for a display because I forced Francesco to do it. He didn't want to do it, but I said, if you're going to speak, you're going to bring your books. So here they are. If you're fluent in Italian, or if you want to learn more Italian and about Bitcoin, here's the chance to get one of the books. Go talk to him later. Francesco, I'm done embarrassing you now.
Good enough.
This is it. I'm going to hand out the microphone to you.
Yeah, 'cause
One
this
last
is
remark.
not working.
One last remark to the audience. This is not going to be a university lecture, okay? This is not a TV show. This is Crypto Hub. We are just people, and you are people. They are smart, you are smart. So talk to each other, okay? If you have some questions, if you have some remarks, there will be a Q&A at the end of the debate. But I think if you have something super urgent you want to say, put up your hand, and I'm sure Francesco will give you 1 minute or 1 second to say it, and then the debate will continue. Okay, Francesco, I'm done. Off you go.
There we go. Thank you. Thank you for coming here. Other people. Yeah. So we're starting from Antonio's presentations from 2 weeks ago. Who was here 2 weeks ago? Not many people, but basically Antonio made this presentation saying that stable coins, you know what stable coins are, right? How many people knows what stable coins are? Not many, but stable coins may disrupt or challenge the US dollar and the US debt, throwing America or the US dollar into a hyperinflation, right? Honestly, along with Somnat, we disagree with that. So we said, why don't we do a follow-up and discuss this topic? Then, you know, the US attacked Iran, and so there's much, much more. But we will start from there. So I pass the microphone to Antonio to quickly, very quickly, sum up what you explained 2 weeks ago, and then we see why we didn't disagree about that. Is that working?
Yes, it's working.
Yeah.
Okay, so some of you were here last time. I'm going to try at best of my abilities to make it
Very,
short
very
as possible. Now, how does it work, as we were discussing? The idea of the US government is to use the debt, currently the debt, to everyday person. Currently, mostly companies and countries own American debt, outside or inside, particularly the country itself. Now they're trying to do this through you. How? Companies like Circle, Paxos, they do get a very nice incentive to mint stablecoin through the Genius Act. The idea is every stablecoin you mint and they give it to you to use, they are getting interest on it. Now, this interest they are practically sharing with you, because once you buy, let's say, $1,000 of stablecoins USDC and you keep them on Coinbase, currently Coinbase is giving you very nice incentive. They're giving you, for example, 1% interest on a monthly basis if you keep the stablecoins on the platform. This is coming straight from the debt, straight from the short-term debt that Paxos or Circle are actually buying with these coins. The hyperinflation is not a matter of if, it's a matter of when. In this case, with more buyers, it can just be bigger and faster. Because at the end of the day, they will never take care of their debt. That's something that we all know. And this is the second question later on we're going to discuss in details. What I'm trying to say is that the stablecoins will be a catalyst for this to be a lot faster, for this hyperinflation to come, because when you allow somebody to borrow as much as they can, guess what? They will.
Okay, I don't quite agree, because I think that stablecoins can actually prop up the dollar, reinforce the dollar, and also the US debt. You were of the same opinion. I leave the word.
Thank you, Fran. Thank you, Antonio. Good evening to everyone. So, voice, please. Hello?
Yeah, just close it.
Hello? Can you hear me?
Yeah.
Hello? Oh, okay. It has to be that close. It's like I'm missing something. Good evening to everyone. Thank you, Fran. Thank you, Antonio. All right, give me some leeway here, because I think there are some myth that needs to be busted here. Debt in itself is not a problem. I repeat, debt in itself is not a problem. What is problem is factors like what is debt to GDP. Now, let me clarify this point further. Historically, countries, why talk about countries? Let's talk about at our personal level. We all have some debt, don't we?
No.
Maybe you don't, but most of the people have debt. Most of the people buy houses, most of the people buy a lot of high value items which you cannot buy unless you take debt. Debt in itself is not a problem. I repeat that again. The level of debt as a ratio of what your balance sheet is looking like, that could be a problem. Historically, there are countries like Germany which has been running a very low debt to GDP, approximately 60%. And everyone has been urging them, you talk about IMF, you talk about World Bank, you talk about EU, everyone has been urging them to take more debt. Why? To understand this point, if I may put it very simplistically here, let's assume that you are worth 100 million. I'm sure you are worth more, but humanly, the math is easier, 100 million. Let's say you want to buy something, let's say you want to buy a private island. You're looking to buy the Necker Island from, Truffone.
Or Epstein.
I didn't want to say that because, So, let's say this is a high value item, 10 million. You have 10 million cash with you. Should you use your cash, or should you go to a bank to fund that 10 million high value item? The answer lies in, if you have a project, an alternate project, where your ROI, which is return on investment, is at 15-20%, which is 10 million worth, and if you can get a bank debt to get that 10 million at 4 or 5%, it's a no-brainer. You should take the debt, because you have an alternate project where you can get 20%, 15-20% ROI.
Yeah.
So debt is not bad. That's the point I'm trying to make here. The story which I made up for Fran is exactly the same for countries as well. Countries don't need to just spend what they are earning as revenue. They can take debt. They can take debt to do a lot of things, right? So,
can I interrupt you here? That's the next question, or the next topic. The question here was directly to stablecoins.
I am getting to that. So the first thing to understand is that debt is not the issue. Debt to GDP is the issue, right? Now, stablecoin, what is the mechanism here? Let's say that, okay, again, I have to give an example to make it absolutely clear.
Yeah.
Let's say you are making 100 grand a year, all right? And let's say your expenses are 106 grand. Why do I say 106? Because the fiscal deficit in the US is 6%, right? So you're living beyond your means. what's going to happen? You're going to go into the market, you're going to go to Antonio and say, hey Antonio, I need to borrow 6 grand from you. Right? What he will do, he will look at you, he will look at your credit, he will see whether you're going to be solvent in a year's time or not. He will see whether your willingness to pay is there or not in a year's time. And if he thinks it's there, he will lend it to you at a cost. There is a cost of funding, and he will do that. Now, imagine a situation where he is not the only guy who is happy to lend it to you. Let's say there is another person here who is also happy to lend it to you. What do you think is going to happen to your cost of debt? It's going to come down.
Yeah, of course.
Because there is more demand to lend it to you because you're credit worthy for that 6 grand to pay back in a year's time. So the cost of debt for you is going to come down. Now, stablecoin. The same example. US government is running a deficit of 6% per annum. I mean, historically, they have been running around 3%. A couple of decades ago, it was 3%. Now it's at 6%. There is a reason for that. I mean, what we have seen in the last 15 years, after the great financial crisis and after, COVID and all that things, the fiscal deficits have gone up. So running a deficit of, running a deficit of 6%, but the debt to GDP is approximately around 120%. I'm not suggesting that it is, okay, the point here is that whether stable coin in itself, everything else being like, is good or bad for dollar or dollar denominated assets.
Yeah,
that's the question, right? So everything else being same, if I have a 6% deficit that I need to fund, and if I know with the stable coin there would be more demand for that debt,
exactly.
What is that going to do to the debt? It's going to inflate. It's not going to. It's actually going not devalue the debt. It's going to inflate the debt because your cost of debt is going to come down.
Lower the interest rate.
The interest rate of the debt, as you're pointing out, which I'm saying is the cost of debt, is going to come down because there is more demand for it. So before, as you brightly pointed out, that 6% deficit was funded 1/3 by the foreigners and the 2/3 by the local, by the US, entities, be it institutional, be it retail, whatever it is. Now with stable coin, once you have a stable coin, the mechanism is that stable coin they have to issue bills. They have to keep it in the bills. They cannot keep it in the bonds. So the bills, by definition, is something which is less than 1 year. Anything less than 365 days maturity is by definition a bill. So you are the issuer of a stable coin, XYZ, whatever you are. He is a European-based investor. He deals in euros. He comes to you and he says, hey, I want to buy $1 million worth of stable coin. You say, no problem. Give me the equivalent of the $1 million in euros and I will give you $1 million USD worth of stable coin. What are you going to do? You're going to go to the treasury and you're going to say, look, I need to buy the US bills, and this is the US.
That's right.
So it doesn't mean that the government of the US, the treasury of the US, is going to increase the debt. If your fiscal deficit is 6%, you know you're going to raise 6%. You're not going to increase it to 7% or 8%. Okay. It stays there. It stays at 6%, but the demand of that debt has gone up.
I totally share your view. I think it creates more demand for dollars and it be a positive. That's how I see it. But now we go to the debt problem.
No, but I mean, the point is, I think Antonio was saying that it's going to increase the debt just because there is an additional demand for the US treasuries. That means they will start taking more debt. That is not economic. I mean, how should I put it? I mean, economic rationale is not there to do this. Yeah. Why would you borrow more if you don't need it?
Go to the next question.
The next question. The debt problem is there anyway. As you said, 120% for the US. GDP, debt to GDP ratio is absolutely out of control. Italy is 130%, Japan is 250%, France is following now 110%. Most countries in the Western world are too much into debt. The debt is out of control. And the fact that the debt is out of control for the United States, which manages the US dollar, which is the reserve currency of the world, is a huge huge problem. Now, these are the 5 ways where how any country can solve that problem. The first one is austerity. We are Europeans, most of us, we know what that means. Austerity was the word of the day, so reducing expenses and in that way try to increase the income and try to reduce the debt. It didn't happen. It didn't happen after 2008. Debt continued to increase. In the United States is out of control because the deficit is higher every year. 2 trillion a year. We got to $38 trillion debt,
Yes.
which is huge. It's
Ridiculous.
people cannot imagine how big is that. The second one is bankruptcy. Bankruptcy. Everybody who holds any government debt, nothing. I don't think that's going to happen. Austerity, it hasn't happened and is not going to happen. Then we have the hyperinflation thesis. Antonio. Yeah? I don't think even a hyperinflation, that's my opinion, because a hyperinflation means that every politician, every central banker is out of job. And they don't want to do that. They want to keep their seats there, to keep making money out of it. Controlling people and making laws. They want to keep their comfortable seats under their plum. Yeah? And then we have these 2 solutions. So, the first one is inflation, which is devaluation of the currency. It's a gradual devaluation of the currency. Over time, in the same time, you increase your GDP, and that's how the GDP, the ratio that GDP goes down. But that's not happening. As we see, the GDP growth is, how you say, is bad. It's not increasing like in the 80s or the 90s. It's not been increasing in the past 10, 15 years. And with the war, or all these conflicts, it's not happening. All right? Then after that, we will see that there's maybe one chance for that to happen, but we will see that later. And finally, there's the last option. And this is where I do think where things are going to. Reserve asset revaluation. If you have gold and the price of gold goes, let's say today's is, what is it today? 5,000 and something an ounce? Yeah? If it goes to 40,000, let's say, Italy wouldn't have any problem anymore. Because Italy allegedly has 2,500 tons of gold, and with gold at 45,000, yeah, they'd be free of debt, totally. The United States, not so much so, because only 8,000 and something tons of gold, which is nothing, even at $40,000.
We don't know.
We don't know.
Nobody's been to check in for.
Yeah, and we don't even know if the gold is there, because gold is not there. I know personally, personal experience. Gold is not there. They say it's there, and it's not there. So, just give you the microphone. What do you think, once again, is how could they fix the problem in the next 5 years, 5, 10 years? Because now the problem is so big, so unsurmountable that something has to give up.
Do you mind?
I mean, your opinion was hyperinflation.
Just wanted to follow up on
see
what
what
was
he
actually
thinks
said.
about it.
Now, the gentleman next to me is actually talking like these people know what they're doing. These people have no clue what they're doing. This is the biggest problem. The only person that actually had any clue what's going on with their financial system came for 2 months, and it's a good thing he wasn't extradited out of the country. Elon Musk came there and told them, guys, you're talking about some foreign wars, you're talking about everything except for the main problem. Have you ever seen a politician in America coming out and saying, you know what, guys, we need to fix our problem, the problem number 1, which is our debt. Nobody talks about it. You mention it and that's it. They're taking out of the country, not out of the party, out of the country. Now, why is that? Let's put it this way. I don't think it's 6%, it's a lot more than 6%, the deficit they're running. I'm going to tell you why. If you see the income that they're having, which is practically all the taxes, everything that the country is making for the last 4 or 5 years, is around 4 trillion. And the gentleman, the orange monkey that is running the country right now, had a wonderful idea to even lower the taxes even more. Amazing. I mean, this guy is a genius. I don't know. So now it's not even going to be 4 trillion that they're making per year. On top of that, the income that they were expecting, which was supposed to be the tariffs, guess what happened to that? His own court said, you know what? No, now you're going to give the money back. So now they have a lot less income in the country, and their debt is growing. Why? Because they have a big deficit in the budget every year. The deficit in the budget is at least 2 trillion every year. At least, I'm talking. Let's not forget that the orange gentleman decided that they didn't have enough money for war. Now he said, you know what, not enough. No, 1 trillion. 1.5 trillion we need. There is some brown people who still haven't bombed. So, you know how? You need to get it everywhere. So what's the problem here? Let's put it this way. Let's say that America is Uncle Sam, right? So Uncle Sam is just a normal person that has, as the gentleman discussed, income and practically, let's put it this way, to make it simple. Now, if you are taking, let's say, 4,000 euros per month, right? And you're wasting 6,000 euros per month, although this is on a yearly base. And you're practically running 2 trillion in this case, or 2,000 in this case, deficit. Every month you're minus 2,000. And currently your debt is $38,000, let's say. So they're already 5 times what they're, no, even more, practically almost 10 times what they're making, right? That's how much you're owing to everybody. Not only the bank, everybody. So they borrowed from absolutely everybody. And guess what? The interest about the American debt is not rising, not even close. China is selling like crazy. India is selling like crazy. Everybody from BRICS is selling like crazy. Guess what? We have a splitting world. And these people, they don't want to end up like Russia with frozen assets. So let's put that aside. So it means, no, the interest about the debt is not rising. That's why they came up with this wonderful idea. You know what? Let's sell to these guys. Why not? They will buy, we'll give them 1%. It's better than the bank. For sure they will buy. But let's put that aside. So where is the problem here? How much longer you can go when you're running every month 2,000 in a deficit? And let's not forget the best part. Now every month you need to pay 1/4 of your paycheck only as an interest. So their interest is highest as ever been in the last 10 years. Their interest rate for the debt that they have jumped from 250,000 to 1 trillion. Now it's 1.1 trillion if you consider the debt of the country and the debt of the federal states, because they have additional debt as well. So 1.1 trillion, so let's put it in a basic line. You get 4 trillion a year, you're wasting 6 trillion a year, and in the same time you're paying interest of 1.1 trillion. And let's not forget, additional 1.5 trillion for bombing around people, right? Basic mathematics.
I totally agree, it's out of control. Let's see from a pretty much moderate person here. How do you see it? How they could possibly...
I almost feel the electricity running through me.
Yeah. How could they possibly... How do you see... Could they possibly get back in control of the debt? What's your scenario?
Austerity from deficit to surplus. It's a theoretical possibility. I don't think it's going to happen today.
No, it's not going to happen. It hasn't happened, it's not going to happen.
There is politics behind it. There is a basic structure.
You can cut expenses. I mean, actually, they're increasing expenses also in the military business. Trump increases the military expenses every year.
So, for the world to run, you need creditors and you need debtors.
Yeah.
So, if no one's consuming, then nothing will work. Right?
What's your scenario?
Go back.
Yeah. How do you say?
Bankruptcy. Look, I mean, these are all theories. Whether it's going to happen or not, I'm not going to comment. All right. Bankruptcy.
Bankruptcy could be also restructuring the debt.
The thing is that
we pay 20%.
We use terms so loosely, like hyperinflation.
Yeah.
Do we know technically the hyperinflation? What does that mean? Hyperinflation means a double-digit inflation. On a daily
I don't think
basis.
it's going to happen.
So these are terms which we use very loosely. We should be more careful how we talk about macro, how we talk about economics. It's fine. We are bashing people, we are bashing things. That's fine. But I mean, still get some perspective on how things work. Hyperinflation, I just talked about. I'm not going to comment
I don't believe in that.
apart from the technicality of it. Okay, sorry. The currency's gradual devaluation along with strong GDP growth. All right. Can it happen? Of course it can.
We will see now with the next slide.
But as I was saying earlier, the stable coin is actually good for the dollar
Yeah.
and the dollar-denominated assets.
Yeah.
Reserve asset devaluation, I mean, that's another. No,
I mean, go there's reason.
I will tell you what I feel, how it can end. As I was saying, debt in itself is not a problem. The problem is debt to GDP. Even there, as you rightly pointed out, Japan runs a gross debt to GDP of 230%. And they have been running it for more than 2 decades.
Yeah.
Why haven't they gone past you?
They're close to it. They are very close.
No, well, I mean, see,
They have a lot of problems. I mean, actually, all this mess in the financial market started with Japan having problems in raising interest rates in order to control inflation and everything else.
see, Japanese people are the highest savers, one of the highest savers in the world. They are funding the government of Japan. They are funding the treasury.
They're funding
They
the
will do
US
that.
as well. Yeah.
So, 230% debt to GDP still haven't gone bankrupt, right? The point I'm trying to make here is that even though debt to GDP is a very important matrix, even there we have seen there are exceptions and there are reasons behind it. Now, if we are focusing on debt to GDP, US is running a debt to GDP of approximately 110 to 120%, give or take, right? It is definitely beyond that sweet 60 to 80% spot, which IMF, World Bank, everyone says is a decent level of debt you should have. It's actually good to have 60 to 80% sort of a debt level. 110 to 120 is high, right? But if the denominator of the debt to GDP can go up, that will bring.
Yeah, we will see how it could go up.
Yeah,
Artificial intelligence
it could go
is
up
the new
with AI.
thing.
Yes.
Ah.
This is my point. The way to increase your GDP, there are only 2 ways you can increase your GDP. One is if your population is going up, which is not happening, and the second is if you can get productivity up. The productivity up, what we have seen, there are phases. After the dot-com bubble,
Yeah.
the productivity went up.
Let's get to that. Artificial intelligence, all right? It's a productivity revolution which could increase the GDP substantially, but I don't see that because, guys, I don't know, anybody is dealing with AI agents, how many people? Okay, I have a friend of mine, I'm not into it yet, I want to explore. I have a friend of mine who's really into it. He said to me, big cities like Milan, London, Paris, within 2-3 years, 70% of the white collars, so people, executive jobs, dealing with the computer every day, will be out of job. 70%. That's it. He's guessing that. Within 2 years. It's crazy. Can you imagine a big city like Milan, Paris, London, with 70% of the white collars out of job? Yeah, it's a massive increase in production, but for a few people, those few people that can manage the AI.
So now you talk about social inequality.
But
So
I'm
you're-
talking
you're
about
arguing against the point of GDP actually enhancing because of the productivity increasing.
Yeah.
Your argument is more on the social inequality side of things.
the B, I mean, every revolution, it took some time. Let's think about horses. Okay, we don't have horses on the street anymore. We have cars, and he gave more and more jobs for people who produce cars, repair cars, and all the chain of productivity of cars. But AI is too fast. I know people are talking about regulation of AI, but I don't think it will solve the problem. This is highly disruptive. Before having some benefits for the broader population, it will take some time. Maybe too much time before people which are going to lose jobs, which means also less taxes for the state, it means more expenses for the state, and that actually increase the problem that we saw before. Because these companies, all the people that are using AI, I don't think they're gonna pay so much taxes Because AI is the third pillar, as I see it, after fleeing to countries with lower taxation and they're fighting that. Because if you see what happened to Dubai, it's a war on people trying to flee in countries with high taxation. If we see Bitcoin, and we get to Bitcoin in or cryptocurrencies in a few minutes, even Bitcoin got halved basically in 4 months, and that's also war on sovereign individuals. And then AI. AI is a big, big question because also they can regulate, and if they regulate that, actually it's even worse. Hitting the sovereign individuals once again. And that has many, many more risks because as we saw with the internet was supposed to be a revolution for the people, right? Actually, nowadays, internet is controlled by the state. Tomorrow, AI will be controlled by the state once again, against us. So, I don't know, we get into the war now, to the next slide, but the question I want to ask you is, how do you see AI in this process as something that accelerates the problem that we saw before, or something that can reduce it, honestly, within 5 years?
See, every revolution the humankind have seen, starting from the Industrial Revolution in 1600s, which happened in the UK, it started in the UK. There are losers and there are winners. The human nature is to rescale. It is basically
Absolutely. It brought long-term benefits to everybody.
we survive. That's Darwin's theory. We survive.
But I'm talking about the short term now. You know, because we are in the long term. I'm pretty sure that AI.
So then, if you're convinced in long term, it is good for you. I don't know the answer.
But
to that.
in the short term, we have the debt problems, and
I'm not as sure as you are about AI being so beneficial to the humankind. I'm not so sure about that.
yeah, we
It can go either ways. I'm not suggesting it cannot go either ways. But if you're convinced
10 minutes.
that even in the long run it is good for productivity, then by definition it should increase the debt. It should increase the GDP.
The GDP.
And
But
if
in the
it's
long term, in the short term, we have problems, in my opinion. What do you think?
in the short term, are you seriously suggesting me
We
that
only have 10 minutes.
That's a question.
Exactly. But pass the mic to quickly, and we move to the next one.
So guys, short term obviously is very positive, except for the GDP especially. Why? We saw that America in the last year, they didn't have industrial production. They had data center production. 90% of the GDP of America came from data centers from the previous year. So the only way they actually kept up the GDP is literally through Nvidia and their game. But let's put that aside. Long term, you see what's written here? Rage Against the Machine. That is the best band of all time, but in the same time it came from an idea. What happened in England when they brought the first machines in the textile industry? People came up and literally broke everything. I think this is exactly what's going to happen. This is a short version of the longer answer. What I'm trying to say is that AI at current stage is definitely not meant for our good, 100%. I would just say like this. How big of a percentage of ChatGPT do you think you're using? You think you're using like what, 100% of the potential?
No.
Maybe 1%. Maybe 0.1. What I'm trying to tell is at the end of the day, the AI that we are seeing is just a fraction of what they actually own, and I'm going to tell the next point on the next question.
Yeah, because now we are entering this war. First of all, I want to ask you, what do you think about this war? Quickly, in 2 seconds.
Which one?
This US-Iran war. The current war.
Quickly, how do you mean quickly? Listen, this is just a neo-colonialist state thinking it's the next Rome, nothing new. We've seen this with the Spanish Empire, Portuguese Empire, Dutch Empire, the Third Reich, you name it, the English Empire, same. This is just another Rome. It's going to follow the same collapse of Rome. And where, you know how? There is a very nice picture of this. There is like 5 tomes of the collapse of Rome. So we're practically on the 5th one.
Yeah, I saw that, yeah. What do you think?
Well, no one's talking about Epstein files anymore.
Yeah.
So, you know.
So you think that was done to suppress the...
No,
talking about the Epstein
politicians.
files. Is it possible? It's one of the theories. It's
Anyone-
one of the theories.
Of course, I mean, I'm not suggesting that's the only reason, but if you're a politician who's, I mean, Netanyahu is a big example. I mean,
Yeah.
he has been fighting one war after another because
Yeah.
his position is little, you know,
Yeah.
problematic in Israel. So if you can create a crisis, it's always good for a politician.
Yeah, crisis is always good for the state, and that's why I do believe that these, whatever is happening, it could be a cinema show. We know that they did that many, many times in the past. Also, yeah.
Nobody's talking about pedophiles.
It's gonna bring about. It's gonna bring about this war, this whole situation. I have no doubt. I mean, I've been starting to study economics and exploring the monetary, because I do believe that the fiat system that we are currently using and we've been using for the past 100 years is about to finish, to be over, to collapse. Now we're dealing with hyperinflation, maybe gradually, but it's gonna happen, and we are, in my opinion, close to the third big print. The first big print was in the financial crisis of 2008, the great financial crisis of 2008. The second big print happened after the COVID crisis, and we are on the verge. It will take maybe another year or so. The third big print of money. All right? That's how I see it. What do you think? Do you think it's
So
close?
guys, why digitization? Why CBDC? Why CBDC? These people have literally collapsed the existing economical system to a bare minimum. They have devalued every currency in the world to 99.9%. They have managed, already done. So these people now, while they manage to destroy every economical system in every country in the world, they say, you know what guys, give us more rights. Now let's completely discontinue cash and let's digitize everything. Give us complete right over your finances. We're going to control everybody's finances. Why? Because it's digital. And there is only one node, as in is the central bank of the country, or doesn't matter, there is several types of CBDC. In America, what you see right now, the stable coins are a CBDC. Just privately owned, controlled by the government. At the end of the day, Circle, Paxos are completely under the boot of the Federal Reserve and the controller that controls the banks. What I'm trying to tell you is that next one is not going to be a print. Next one is going to be digitization. You know why? Because if you completely control the economical system, in this case, like a digital money, you can just say, you know what, 38? No, 0. We don't have any debt. Literally like that. What do you think?
I want to ask you, why do you think they would be printing another big round of?
Because, I mean, 11 billion, that's still nothing. But I don't know if you follow the bond market as well. Interest rates were 0 until 2020, 2021.
2022.
Then we had like a big step to 4%, 5% in the United States. The European Central Bank maybe 3.5%, how high they went. And I do believe that there will be another step up to 7-8% interest rates. And in order to sustain that much, they have to buy bonds. Nobody's gonna buy bonds. Bonds, and I've been saying that since, they bottomed out in 2020. It was holding bonds, holding debt is probably the worst thing you can hold in your portfolio. The worst. Okay, you're gonna lose money. There was inflation 20, 25%, 30% since 2020.
Exactly.
Even look at the German auction today. No buyers. People is already expecting much more higher interest rates. As you can see, next leg up will be up to 5%. All right. If you hold bonds, in my opinion, this is not financial advice, but you're screwed. All right. And people have to buy something. They have to buy real assets. Gold went up to $5,000. All right. Silver as well. Oil now with the war, maybe I don't know what's going to happen, but probably there'll be another huge wave of inflation. Now we get to the point about gold versus Bitcoin, because gold is anticipated, probably anticipated the war.
May I say something
Yeah.
about that German failed auction you're talking about?
Yeah.
I really don't think it's as big a deal as people are making it out. Okay? Failed auctions are not a bug. They define the system. It's a price finding mechanism.
Yeah.
Understand how the auctions happen. You talking about the auction that failed? I mean, Ferris, thank you very much for sending me
Fail
that.
means that there were not enough bidders at that price. They wanted a higher interest. A higher interest.
Let me explain. The last auction for the 10-year bond in Germany happened at 2.72% yield.
Yeah.
Right? They could not fill it at 2.72. They were competitive and the non-competitive bids, which came in at 2.89.
Yeah, kind of.
What has happened to the yields globally in the last week or two? They have all gone up.
Yeah.
The US Treasury 10-year yield has gone up by like 20 basis points. In Germany, it has gone up by 20-25 basis points. So, what is the mechanism? You want to sell 5 billion euros worth of German bonds, which is 10-year German bond. You go to the market, you ask for competitive and non-competitive bids, and then you realize that no, people don't want to buy it at 2.72, which was the last auction. They want to buy it at 2.8.
Of course.
Now, this is not the first time a government auction has failed. If you look at, I mean,
Yeah, I know, but that means that people are expecting, they want a higher interest rate.
It doesn't mean that the government bond is going to go down the drain tomorrow.
No, of
It
course
doesn't
not.
mean
Of
that.
course not.
A failed auction
Of course
doesn't
not.
mean anything in itself.
But
it just means
is a symptom of, yeah, people want more. They are expecting, you know, higher, another wave of inflation. They want more. They are not happy with
what
2.7%.
was the rate of interest for the US treasuries in 1970s and 80s?
Yeah,
What was it?
very high. In the
15 to 20%.
Yeah, exactly.
Why was that?
But there was
Because
no
inflation-
debt. There was no debt. Today the
Of course
debt
there
is
was
super
debt.
high.
Of course there was debt.
There was nothing.
US
After 10 years of inflation, debt was basically nothing.
US came out of Bretton Woods in 1970.
We cannot too much into that with that, but I can tell you there was not, after 10 years, there was no debt anymore. When they raised the interest rates to 20%, the debt was, GDP ratio was
May I
zero.
just say one sentence?
And I wanted, yeah, very quickly,
How are you
I want to
supposed
ask you that.
So you're saving 10 years, right, to get 2.5% in return. And the inflation on a year basis, 2%. So in 10 years, you have practically lost, what, like around 8%, but you gained 2.5%. I mean, what's the point of buying bonds?
Yeah. Listen, gold versus Bitcoin. Gold went up. Bitcoin, which absolute scarcity, it went down. Less 50% in 4 months. What do you think? Is gold much better than Bitcoin? Why Bitcoin has really underperformed, being a way of protect your wealth in this inflationary environment? Why has so much been disappointing?
Guys, it's a cycle. Practically, we have one pool of money. That's it. It's one pool of money. Doesn't matter if it's euros, dollars, it's one pool of money. It's the M2, the circulating supply of money around the world. So what happens? It slashes around. Now it goes into gold. Then it goes into Bitcoin. Then it goes into something else. The idea is that,
Okay.
in 2021 we had reverse. The gold made top, started
Okay.
going down, Bitcoin went up.
For you,
the
it's
same
a
situation
cycle.
is now.
For Sana, I don't know if you follow Bitcoin and gold, but what do you think?
The narrative for
Or how would you protect your wealth in the next 5 years? Let's say?
I would have both Bitcoin and gold in my portfolio.
Okay, that's good. Final question. Yeah, that was the question. What would you do for the next 5 years? How would you, or let's say, not a single percentage, but gold and Bitcoin together, which I don't think, you don't like Bitcoin? Sorry, you don't like gold?
Guys, we're in the verge of third world war. Like it or not, that's the truth. We can see this is literally all the symptoms before the second world war.
I don't think so.
Think about it. When you need to run from a country in another country, can you run with 2 bricks of gold? Can you run with 500,000 in cash? No. What you can run with? with a ledger, with a paper, with a phrase, right? So this is my opinion.
Yeah. One thing, I don't think there'll be a World War III in the traditional sense with bombs and nuclear bombs. I do think that the final war will be fought through economic means, financial means. That's why I kind of agree. I would tend more for the Bitcoin. I'm quite disappointed by the performance, but I do think the thing will reverse in the future. They will probably race together, or they have to race, go up together. That's how I see it. I leave for any questions if you have.
Questions from the audience? Open up the hands. Who has a question? Question here, question there.
Hi, thank you very much for the panel chat. Much appreciated. One point to the gentleman to the left. I apologize, I forgot your name. I think it's important.
Oh, you asked me? Okay.
Yeah. I'm sorry, I forgot your name.
That's all right, so not.
I think one quick point about gold is that, yes, it has appreciated, but it's important to remember that between 1980s and 2000s, gold price was stagnant. It didn't move at all. It was a terrible store of value. Another point about the debt is, I think the criticism around debt is that debt is basically stealing. I don't want to use the word stealing, it's the only thing that comes into my mind. It's basically taking value from the wealth of the future to fund something in the present. If the debt is being used for unproductive means, such as war, such as paying interest, then it does not enhance the output so that in the future the productivity gains can outpace the debt. Of course, inflation helps because it devalues the value of the debt, which creates an endless feedback loop where we need more devaluation of the currency to be able to refinance the debt, right? But if it's not used for productive means, it's just not a good idea, I would say. And debt to GDP ratio, it is important, and of course, just like you mentioned, in Japan, it's the Japanese companies and people that own the debt. So it's easy if Japan wants to repudiate the debt to actually do it. Yes, no, those actually statement. Sorry, apologies. That's all. Maybe your point of view on this.
So if I may recap what you're saying, you made the first point about if your debt is going up, whether the debt is going up to structural reforms, is it going for something where your ROI is higher or not, right? If you are spending it on building a nuclear submarine, or if you are building it to $14 for $15 million missiles to take out a terrorist, I mean, whoever you think you want to take out, it's a wasted money. That's your point, right? Yeah. I totally accept that point, okay? But the bigger point here is that, I mean, the number which Ferris gave in the front, in the beginning, is that it's $1 billion a day or something, Ferris?
Yes, $1 billion. Yes.
So the US nominal GDP is $33 trillion, okay? Now, if you tell me that this war is going to continue for a month or two, it's going to cost 60 billion. I mean, going by that number, right? What percentage of your debt is that? I'm not suggesting it's the most useful way to spend your money. I'm not saying that at all, and I totally take your point. But in the bigger scheme of things, what we have seen in every revolution, starting from the Industrial Revolution, is that the productivity has gone up. There have been wars. We have fought 2 bloody wars in Europe. We have had numerous wars, even after the Second World War. Numerous wars. Where is the productivity right now? Where is the per capita GDP right now? It has gone up. Okay? So, and then you were talking about inflating out of your debt, sorry?
So the constant feedback loop mechanism of central banks buying.
Oh, right, okay. You were saying the gold was stagnating. And so you have to understand the history of gold. After the Second World War, when Bretton Woods started, where the dollar was pegged to the gold, That's when it was doing very well. After 70s, when the US came out of the Bretton Woods, the dollar reserves in the central bank's FX reserves came down from like 20% to like 5% by early 2000s. So there was no demand for gold because there was demand for dollars. Every central bank was holding dollars. They were not holding gold. So the reserves came down to 5% in gold. Now we are seeing the reversal of that. We are seeing the reversal of that is because the trust in the US, trust in the institutions in the US, it's waning. It's waning.
But even among countries.
Because they are saying the political, why would you hold dollar? You would hold dollar because you believe in the American system, because you believe that those dollars are safe, they're not going to be inflated away. You believe that you would be paid back. If you think that you have a leader of a nation who doesn't care about those things, you would stop buying that asset, right? So suddenly you're moving from dollar into the old system of gold. So, as you rightly pointed out, the early part between 2000 till whatever, 10 or whatever, the gold wasn't doing much. And I disagree with your point that it is not a good store of value. Gold has been a magnificent store of value ever since humankind discovered it.
I was pushing for a question and I'm pushing for an answer now. You need to ask those questions real quick now and answer also really concise and quick. We don't have much time left. Question here.
So thank you for the beautiful panel. You spoke about a lot of things, but you didn't touch much the concept of de-dollarization. And you didn't speak much about the BRICS countries that are actually pushing that direction. I would like to have your opinion on that. And as an extension, I would also ask you if you think that AI will push in the direction of de-dollarization just because it will use more crypto than fiat for the AI activity.
Sorry, who is this question I just
So, the opinion on de-dollarization coming from the BRICS country, and will AI impact the de-dollarization even further?
You want me to take that or someone?
No, both of us.
Okay, so de-dollarization, I was just touching upon that when I was answering the question to the gentleman. De-dollarization is actually started to happen. The dollar component in the central bank reserves 3-4 years ago used to be like close to 62-63%. It has come down a little bit. I don't know the exact right now. Is it 56? Thank you. So it has come down. So de-dollarization has started. Okay, no one can deny the fact that the loss of faith in the U.S. institutions have come down. And people everywhere are looking for diversification. That's the de-dollarization, going into gold, going into Bitcoin, going into other currencies or whatever. The second point about is AI going to be good for de-dollarization? Was that the question? I need to think this through, and what I'm going to answer, I'm thinking right now. I mean, I didn't think of any relationship or the causation between dollar and AI, because I think AI would be a global phenomenon. It is not just going to be restricted to the dollar or the dollar-denominated assets. Everyone would be benefiting or being impacted by that. Be it the social inequality these gentlemen are talking about, it could happen. It could cause all sorts of problems, but not just for the Americans. It will happen for everyone. Now, it looks like that Americans are still ahead of other countries when it comes to AI. So if it stays that way, my rational argument would be that it would be good for the US capital markets. They already have a very, very deep capital market, which is good for their innovation. Why do you think all the big companies, you have $4 or $5 trillion companies in the US, but in Europe or anywhere else in the world, they don't have that big market cap countries because there is no depth in the capital market. So if there is a depth in the capital market in the US, if AI is coming there, it would actually enhance that, rationally speaking. But these are so early days. I really wish I could say something with any historical precedents or anything to go with anything to back my judgment, but I don't. I mean, all I can say is that my hunch would be it would be actually better for the American system.
Now, if I may, first, the gentleman over here jumped completely the hyperinflation of the dollar. And now he's saying, yeah, because everybody is scared that if they buy dollars, somebody might hyperinflate them. Why? So it happens that everybody is scared, right? So it's not only me, obviously. Everybody else thinks the same, including the BRICS countries, right? Because this is exactly the point that they were saying. Hyperinflation is not going to happen, for sure. Let's see. The same we're thinking in Iraq, in Turkey, in Argentina, and here we are. Second thing, for the IE. Let's put it this way. Everybody that knows how IE works, if you give a chance to the IE agent to choose, it will never, absolutely never, ever choose fiat. Again, why would it? It's toilet paper in color. Why would you choose that, right? So any AI agent will right away choose crypto, no questions asked. And it's already proven because there is a whole ecosystem of AI agents that are completely allowed to do whatever they want in their own economy. And guess what? They chose it.
There you go. That's a nice closing statement. Thank you very much for this insightful panel and sharing your thoughts with us. Thank you very much. Thank you. We are going to be back next week talking about a short, long position. It's a way to be delta neutral in a bear market. If you like money, you're gonna like next week. We're gonna stick around. If you didn't have the chance to ask your question, do it now and see you at the bar. Thank you very much for tonight.
Sistema de crypto, što ga se desi? Ti što razbra? Ajde mi kažeš, što se tu desa?
Like a baby.